Welcome to TheoTrade. This is Don Kaufman. It's September 24th, 2025. There's about 10 minutes to go to the cash close here on this Wednesday afternoon. The S&P's down some 24 handles. Look, calm down there, cowboy. It's only 2 down days. And quite frankly, this one's not even over yet. This is a 0.3% move. I feel like trade right now has completely changed their attitude. Literally, they're nervous on the edge of their seats because 2 back-to-back down days, and this one's so mild right now, but there's still a tremendous amount to look at. There's quite some funky activity going on in terms of advanced decline line. There's a ton to talk about inside of the AI trade. I'm going to discuss a little bit about volatility and a couple of the trade opportunities. Let's start to break it down here in this TheoTrade evening video. All right, so start in the S&Ps. As I was saying a moment ago, let's just everybody just calm down because the S&Ps are having 2 back-to-back, down days. To put that in a little bit of perspective. So yesterday, the S&Ps closed down, 30, 40 points. Today, they're down 20 points. You do realize that's not even a 1% move. And I mean, literally, there's trade right now. I'm watching chat rooms and so forth here at TheoTrade where, you feel like people are starting to get a little bit more nervous. But before you get, again, too hopped up, one of the first things that I'm actually going to point out is volume in markets right now. This is by no means extreme. The S&Ps, they're trading just over 1 million contracts. That's the S&P futures, trading just over 1 million contracts, which is kind of light and fluffy. That doesn't exactly that's not the epitome, if you will, of a down day. One of the things, though, I think in contrast to that, options volume the last couple of days has been staggeringly large. Like last Thursday, we did 84 million. Last Friday, we did, 83 million. Even yesterday was, again, some pretty mild sell side activity. You still did over 71 million option contracts. So capital right now is absolutely moving, but the S&Ps, they're not really moving and they're not heavily hedging. So I can tell you one thing, the risk is being perpetuated. Like there's a huge amount of risk out there, okay? Critical amounts of risk. In fact, you can clearly state, when we talk about risk in markets, one cool thing, it's very easy to say, when markets are effectively at all-time highs, there's never been more risk in this business than right now. And people don't understand, well, how could that possibly be? Well, come on, we're at an all-time high. Yeah, which means there's more capital, invested in there than, ever before. Nevertheless, 2 down days doesn't exactly make sell side. But you also have to realize, forget about being at an all-time high for a second. Again, the amount of options volume trading, it is, to me, very, very much baffling. So large that it's baffling because the volume in the S&P futures isn't huge. And you go, so what does one have to do with the other? Meaning the option volume is absolutely magnificently large, never been bigger in consecutive trading days. Okay, what does the S&P futures volume have to do with it? The S&P futures are the natural hedge, for professionals in the industry, especially if you trade SPX. If you trade SPX, there's no underlying in the SPX. So when you click on, buy the ask, SPX is not tradable. It's an options only product. They use the S&P futures as the natural hedge. What is unusual, is the magnitude of the trade that we're actually seeing go through in products like the SPX. The SPX today is going to trade almost 4 million contracts. Oh, whatever, man, 4 million contracts. Take a look at Tesla, Yeah, Tesla's doing 2.5 million contracts, but Tesla's only a $400 product. Once again, the SPX is a $6,638 product. Who's going to win that war? In terms of notional value, which is the actual, equivalency value associated, the SPX is hundreds of times larger okay? Not only contract size, but the sheer magnitude of the contract. And what baffles us is that right now you're seeing this huge trade go on in SPX, but there's not that much, okay, in terms of S&P futures. So these positions are being rolled forward. There's massive positioning, but the market's not moving them enough to actually cause a tremendous amount of hedging activity to occur. What you got to be careful of in a situation like this is the moment we really start to move, okay, this marketplace is going to go from relatively docile, down 0.3%, to things are going to be rocking. That is not a statement, okay, neither bullish nor bearish. That's a statement of fact, because if you look at markets as a ball of risk, okay, the options volume right now depicts, okay, that the ball of risk has never been bigger. Like if you look at the SPX and you were trading all these strikes, you know, here, both calls and puts, the ball of risk is absolutely massive. And if that ball starts to roll down the hill, okay, it's going to get crazy. It's going to get crazy in a hurry, because the entire professional world would have to actually sell into the selling, meaning they would actually come to life and start selling S&P futures. Clearly, that has not happened. It has not happened, and I say that without hesitation and equivocation, because there's no volume to support that claim. There's none. Option volume huge, S&P volume negligible. Okay, you got to sit on the edge of your seat. And furthering that, if you're into seasonality, it is towards the end of September. You know, this is a volatile time of the year. This is the bad time of the year if the market's coming into October and so forth. So now you're on the edge of your seat. With that, though, that's not really supported by what you're seeing in volatility. Like volatility has definitely come up. It's not exactly rocking. There's no sign of the volatility futures. The VVIX, on the other hand, the VVIX has come up. It is over 100. Okay, because the volatility of the VIX is higher, it doesn't mean we're going to tank. Surely, though, doesn't help. Okay, and we're watching a couple of other products, including like Bitcoin. And I'll tell you why I watch Bitcoin. Bitcoin has been flirting in and around the 110 again, $110,000 mark. If it does crack through 110, okay, that is actually going to spill over, I would believe, into high beta stocks. Okay, crap that matters, and that's actually going to spark a fire inside of the S&P. So be mindful. Okay, there's a lot of factors in play right now that kind of promote risk. Now, one of the things that is worth mentioning, as I said, Tesla's just rocking to the upside over here, just a little bit of a momentum kind of trade. But I'll kind of give you a little bit of a stark warning. If it weren't for Tesla today, markets would not look all rosy, because the advanced decline line has been pretty much 50-50. In fact, most of today's trading session, there's actually been a positive advanced decline line with markets declining. That's not good. When you look at a marketplace and it's down like 0.5%, and you see like the advanced decline line is almost 50-50, you should be a little nervous, because that's when there's 50 other products that could start to sell. So one of the things that I was saying this on the weekend update, and I'm going to say it again today, one of the things you really got to be concerned with right now is we're nowhere near correlation. If you hit higher degrees of correlation, that's when the volume for the S&P futures is going to kick on. Okay, that's when, what I mean by that is this advanced decline line like has 90 decliners, or even 90 decliners or 90 advancers. I don't care. What's going to happen at that point is this S&P volume is going to really start to pick up, and all of a sudden markets are going to go from this docile kind of, I mean, today's a down day, but it's kind of like staggering, you know, out there. It's just stagnation, if you will. Not a lot of oomph behind that trade. Nevertheless, okay, watch the advanced decline line pretty carefully in the days to come, because I think we're actually on the verge of seeing higher degrees of correlation once again. Okay, again, that would actually also bring back some heavier amounts of volatility. As I gave you a little bit of a volatility update, not showing a lot of risk out there. Tesla, though, kind of came to the rescue. Every day something's coming to the rescue. NVIDIA, let's talk about NVIDIA and the AI trade for just a moment. Okay, so NVIDIA, oh no, it had 2 down days. Okay, I just have some strong feelings on this one. The discussion, okay, of OpenAI in just the last like 48 hours has hit like, I think the only thing you call is like, it's hit ludicrous speed. I mean, we're talking about OpenAI received $100 billion investment from NVIDIA, but then you get Sam Altman on stage talking about, okay, the spend is going to be trillions of dollars in the next couple of years. In fact, it's been pointed out time and again, OpenAI is planning, okay, on spending the equivalency of like what Japan's GDP happens to be. And just from my perspective, I think we've kind of, if you will, jumped the shark. If you guys are familiar with that phrase, jumped the shark in AI. Like how much, like, yes, some of these stocks can still have some upside potential, but how many more announcements are going to come out about building trillions of dollars of servers, okay, and 10 gigawatts and 5 gigawatts, okay, 2,100 gigawatts. I mean, it's the entire conversation has become like ludicrous. It really has. There's the closing bell. So the conversation, it hasn't left, okay, much upside potential for an NVIDIA, okay, for a Broadcom. So be careful at this point, because what are you going to have prop these up? Somebody else is going to come out and say, we're also going to spend trillions of dollars, okay? The demands of AI, okay, are just, this is an unquenchable thirst at this point. But once throwing out, trillions of dollars of infrastructure spending from a nonprofit organization, of course, like OpenAI, it becomes a little bit disconcerting. As I said, I think they kind of jumped the shark a little bit there. And let's not get ahead of ourselves. Now, with that, I'll be watching again a couple of these companies very carefully, because, as I said, really what you have over here is the hubris, okay, in the markets. It's absolutely fever pitch. It's fever pitch from everything from the CEOs of the companies to the TheoTrade chat rooms, where it's changing the world immediately. Okay, everywhere I go, somebody's talking about markets again, somebody's talking about crypto again, and historically speaking, that has not necessarily been a positive thing for markets. Think about it. Everybody should think about exactly what I'm saying, and everywhere you're going and every discussion that you're having is about markets. Okay. It's typically not a positive thing. Let's talk about the SPX for just a moment. What have we done? Okay, on Monday, a little bit of a bid to the upside. On Tuesday, we gave it back. Here we are on Wednesday, some sell side activity. People, it's meager. It's about an $84 expected move this week. What have we actually done? Not much. I mean, not much, but what are we looking at for the remainder of the week? And for that, we cut over and we look, again, 4 million contracts traded in the SPX today. I mean, that crap is real. And it's spectacular. 4 million contracts in the SPX. By the way, let's throw this out here too. Let's throw the spiders in there. Spiders are good for another 8 million. Holy crap. The size trading, just those two products traded 12 million option contracts out there. Whole market may only do 70, 80 million. And those two, okay, it's just, and they're basically the same thing, just staggeringly large size. All right. As I was saying, implied volatility, you have PCE data coming out. PCE data actually coming out later, of course, in the week. I'm going to tighten up the number of strikes over here, but I do want you to look at what I think is incredibly low implied volatility versus some of the data that's coming out. There are data points coming out on Thursday. There are data points coming out on Friday, and we're still only expecting about a $50 expected move. People, I'll take the over all day long. Expect some more volatility to come into play. I mean, it's interesting. The S&Ps might be down about 20 points right now, but the volatility is also down. As I said, there's no punch to the trade out there. Look for that advanced decline line to change hands very, very quickly. If the advanced decline line gets correlated, either positive or negative, it's going to be the sign, if you will, of volatility to come. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.